say that I'm happy today to announce that we are now finally embarking on the final stage of establishing a revolving fund of Kenya shillings 3.8 billion to meet the objectives of addressing youth unemployment and encouraging growth of micro and small enterprises as key drivers of economic growth and development. Ladies and gentlemen, the fund, which we officially launched the 14th of March 2011, which was followed by the signing of the agreements with the three selected banks, namely Equity Bank, Co-operative Bank, and KREF Bank, to implement these funds. We are going to actualize the operations of the fund by availing the first tranche of Kenya shillings 250 million each to each bank for credit extension and 50 million for capacity building. This program has been a great success, and to date we have dispersed all credit with a repayment rate of 100% to government and 96% to the banks. The program has also gone a long way in removing the invisible barriers that separate banks from the small and medium enterprises and indeed the informal sector borrowers due to the perceived risk. Through the capacity building facility, banks are in a position to understand the risk profiles of this sector and therefore lend at rates much lower than what the borrowers were paying before. In some cases, we believe that the benefit to the borrowers will be up to at least 10% lower. Over time, ladies and gentlemen, we expect that the banks will have built enough information about the informal sector and SMEs, and they will therefore be in a position to go directly to them without the support that we are providing now. We also expect that due to their better understanding of the risk profiles of this sector, they will be able to lend, as I said earlier, at lower rates. The ultimate objective is therefore to ensure that many more Kenyans have access to credit without government intervention. In the same vein, ladies and gentlemen, we have used the lessons learned to develop a new program targeting the rural area agribusiness value chain in partnership with IFAD, called Program for Rural Outreach of Financial Innovation and Technologies, which was recently launched. It is indeed clear that many of our development partners also share in our vision of empowering our youth and agricultural communities. The fund also addresses financial sector policy goals under Vision 2030 that include increased financial access and enhanced efficiency. It is intended to widen and deepen financial inclusion for the underbanked and unbanked in Kenya through efficient use of innovative delivery channels like m-banking to lower costs of transaction and to make finance more readily affordable to the majority of our people. Allow me, ladies and gentlemen, at this juncture, to delve into the detail of m-banking platform as an opportunity to improve efficiency and affordability. Due to the innovations promoted in the money transfer business, we are now reaching millions of Kenyans, with almost all adults now currently covered. The Central Bank of Kenya issued draft regulations on the provision of electronic retail transfers and e-money in February of this year, and we will soon have a national payment system law. It is therefore no longer an issue to transfer money to any part of Kenya. Leveraging on these technological innovations, we shall be able to reach more unbanked people due to the reduced transaction costs of lending and repayment. The fund also supports the transition of the informal sector enterprises into the formal sector through access to formal providers of financial services. We want indeed to dispel that there is an informal sector that cannot be reached through formal means. The challenge, therefore, to you as the banks that have been selected through a rigorous screening process of the first phase is to provide this platform and to avail the services, including credit, to the low-income groups at sustainable and indeed affordable rates. We are all aware that you will have your own matching funds to this fund, which is more than 5 times the government's contribution. And we therefore expect this business to be fully sustainable. I think it's now indeed our pleasure to hand over the checks. This is Kira Bank.
Thank you.
For 300 million shillings. Co-operative Bank, again, that's 300. Yeah. And Equity Bank, 300. Yeah. We hope you put it to good use. Yeah. Ladies and gentlemen, as you're also aware, in last year's budget speech, we also talked about the issue of procurement. And today, one of the things I'm happy also to note is that the government has indeed issued subsidiary regulations. These regulations are aimed at providing preferential treatment to small and micro enterprises and other disadvantaged groups in public procurement in a manner that is consistent with our international obligations. I would therefore like to call upon all procuring entities in the public service to make good use of this legislation to promote provision of goods, works, and services by our small and micro enterprises and other disadvantaged groups. Successful implementation of this scheme will help promote local, national, and regional industries to grow and hence support faster social economic development with inclusive economic growth. It is for these reasons, ladies and gentlemen, that we decided to draw lessons from the very successful program and indeed invest our own resources as a government to scale it up so that we can reach many more deserving Kenyans. Through the fund, the government seeks to empower an estimated 8.3 million Kenyans working in the informal sector, including approximately 2 million in the Juakali industry and 5 million kiosk owners, hawkers, and mamambogas, with the rest going to the informal transport sector and small manufacturers. I think with those few brief remarks, I just want to congratulate the banks that are going to begin this process. I want to encourage them to kick the process off in the shortest possible time, to tell them that we at the Treasury will be monitoring. I want to re-emphasize that this is a program that will be run and managed by the banks, not by the Treasury, not by the government. It will be run and managed by the banks.